All right, guys, I just want to give the third update to the live trade series we started a few days ago, um, and kind of frame what I'm doing in the context of the higher time frame first. So we have our entry here long. It's pretty uh, in decent profit right now, but I want to tie it to this point of reference, this high, right? We broke daily market structure here, and we gapped up pretty quickly running to these highs. Now this high is very significant. A lot of times you'll see if you go down the lower time frames around these levels, you'll see the lower time frames putting in a little bit of a distribution pattern, maybe seeking liquidity to the downside. Right, we had this volatile expansion, so price needs to move down a little bit to fill the bids before moving up again. And as you can see that we filled this. There's this gap here, this inefficient price movement. Price runs up, and we go down to lower time frames, and we can see this more clearly. Yeah, it runs up, forms just a brief distribution pattern here, confirms it taking out this low. This would be, your consolidation broken to the downside. Even within these very little swings, you could put on the 5 minute, you could put bearish retracements on these, and that would probably be valid. But the point of reference we're looking at now, because we're seeing a little bit of a bullish break, I don't want to play this to the long side. So I took my entry on these highs here. We can go down to the lower time frame. So yeah, I took a little bit of profit up here before I posted the second video, but I was looking to take more off here, more off here, more off here. Of course, I didn't get that. Luckily, I did manage with a stop at the break of this consolidation. Um, and it's always good to have your to manage a little bit of risk and profit. Of course, it's not all or nothing. It was just a small amount of risk that was managed here because price can always come down, take it out, and then continue, and you don't want that to take you all the way out of the trade. But you can see this level is significant because it has staying power, right? There was a stop here. This level was broken, and then upon retest, price retests this level, offers a reaction. Not a permanent reaction, of course. It's just a minor distinction, but it is, it comes right up to that level. Sells off what, $700 within 30 minutes. Not bad. So anyway, we've got this. And I did add a risk on this short-term high here. Price return there. Probably lines up with a 618 retracement. Yeah, again, there's your golden pocket. That's just a different way to see the same thing. Yeah, so we have this major long position on. You can see this is a paper trading demo account on Tradingview. We've got the account balance is $2 million, and we've ran it up pretty wildly in this last trade. But I'm gonna be documenting this and posting more live trades in the future. All right. Anyway, so we still have a significant amount of risk on the table, and the question is, how do we manage risk on this trade? Well, if we zoom out on our high time frame idea, right, looking at this as a base for bullish bias, we don't really have an invalidation until we get down to this swing. Maybe if you're more cavalier using this swing, but the point being, there's still a pretty great deal of distance that price could retrace without destroying the greater trade idea, essentially. So with that in mind, I want to manage risk pretty tight because this thing could break down, fill the inefficiency in here, and then continue a massive rally after that point. So I want to be managing risk pretty tightly, and in order to do that, I need to go down to the low time frames. So I would identify this swing low here. You could use this one or this one. It's not a matter, it's a matter of preference, but in order for this consolidation to move to the upside, I want to see these lows defended. So maybe I'll put a stop just below these lows. Maybe a break even for our trade. Let's see, 4-3-1-1. All right, so we got 393 units. So we'll put we'll manage half, so roughly 195. So we got half of the risk of the trade managed at break even, and then we'll manage the other half at a little bit of a loss below this level.